All right, good evening, everyone. Welcome to Trade Findings and Adjustments for September 1st. My name is Keith Bybee. Good to be with you this evening. Let's jump right into it. So, what do I want to talk about today? Have some notes from last time up that maybe I can just kind of look over real quick before I get really started. JP Morgan. I don't know if anyone has done this bull call, long leap bull call position that we had out a couple weeks ago. And dang it, if the banks have just kind of lost a little steam. But it's holding 100. And this one's for the longer term anyways. So any one of you guys that have done this JP Morgan leap, I guess it's a leap bull call calendar spread is what we called it. So just in case anyone is worried about that, kind of a bummer it fell down, but you know, remember that one's a longer term one. So give it some space. So I wrote these notes down from August 13th. We talked a little bit, I think, we talked about JP Morgan and that specific trade, and if things change the next day, what you might do to alter the strike prices to get within the same cost basis that we had been talking about the day or night before. Just to recap that, so if things move the day after a trade is recommended, you check the chart. Has a support or resistance level been broken? Has there been a reversal or direction change? Has there been any new news on the stock? Has anything changed? Is there a headline that is causing the stock to move? Option prices. Looking at your option chain, and have they significantly changed differently from the day that trade was recommended? And if all else is the same, can I go up or down in strike prices? And can I stay closer to the price we looked at when the trade was recommended? So just some good thoughts and reminders. If you want to kind of remember these tips, they're also just generally good for when you're in the middle of your trade or had just put on a trade, or just something good to follow whenever you're monitoring anything, especially if it's new, or you're looking to put on a new trade. These are good guidelines and something I would recommend. So if you want to check those out, go back to Hurley Academy, my Hurley investment rather. Excuse me, the Academy is our new site we're trying to build up. You can go to My Hurley Investment. You have all the dates down here. August 13th, I believe. Let me just pause this real quick and get rid of notifications. Anyways, you can go here, and I believe that should be all listed there for you. So I'm going to go ahead and get rid of that. And here are some things I'd like to talk about today. Now, if you remember, Kevin has suggested last Thursday the covered call, this one, on Apple expecting that it might have a sell-off. He talked a little bit about that yesterday. For those of you who weren't with us yesterday, basically, we were kind of surprised that Apple didn't have a sell-off, and as we were talking about it, kind of going back and forth on what could be the I guess it's not a problem, but what could be the reason that when people have quadrupled the amount of shares that they had a few days ago, all of a sudden in their accounts, why there wouldn't be a bit of a sell-off to take some profits. And as I was jaw-jacking back and forth with Kevin, there was this, I think I heard it. I'm pretty sure I heard a little light bulb gling sound, bling, go off. And Kevin realized that one reason, or maybe the reason, is because Apple, if you remember, has hundreds of billions of dollars of cash on hand. And dang it, if they didn't buy back a bunch of millions of dollars worth of shares, is the only reason we could think about for why on the 31st there wasn't just a bit of a sell-off. And obviously today we're getting follow through, and tomorrow looks to be even more. So with that said, we always look at a trade or a long-term investment, and a core holding, especially like something of like Apple, with the idea that if we guess wrong, what do we want to have in place just in case? Obviously, you know, he had suggested a covered calls. If you have shares, we had some amount of protection in the form of puts as well. When Monday didn't see a sell-off, we took off some of those puts. We today rolled up our short calls from, I can't remember the strike price on the share price before, but they had been converted down to 131.25s. I think they were like 530, 535, something like that, somewhere around there of a covered call strike. And then obviously the stock split and they were converted to 131.50s or 131.25s that we had moved up for a little bit of a cost, up to 140 strikes. That way, you know, if they get called away, because we're so over leveraged in Apple and we're now at a more convenient place that we can take some profit with so many more new shares, we're okay if those get called away at around 140. Has been such a huge gain for us this year that it just makes sense. So with that said, if you had done an Apple covered call the way Kevin suggested, I think you're still good to stay the course. You can have the idea of rolling up if it doesn't cost too much. My reasoning was, if we're capped at 131.25 and we were at, trying to remember exactly the time, we were hovering around 131, somewhere around there, pretty close, 132, 131, to get another $9 or so of upside, $8, a little over $8 of upside, and for the cost of about $2, that made a lot of sense. Give us some more upside, cap a little higher. So if that makes sense for you, I would recommend doing something like that. or you can stay the course. And if your original thought was that that was meant to be a short-term trade, you can also just let them get called away and convert some profit over to leaps. So option A, let it get called away for a profit. Option 2, roll strike price up. And from what I remember on Kevin's recorded webinar he sent out last Thursday talking about this, obviously you can go back and check it out if you want to, but I assume if you haven't, you probably didn't do this trade, so maybe it doesn't matter for you. But speaking to those of you that may have done something like this, roll a strike up, I believe it was around 525, or he might have quoted 530. I can't recall. Let me see if I can't see. Okay, I had it open. So 510. So that's a huge credit for 510, which would be nicely in the money now. And you could leave it alone. So roll a strike up. That's just your reasoning for rolling up instead of getting called away, is if you're okay taking a little bit of a cost to buy back those short calls, roll up for more upside potential. Now that it looks like Apple isn't going to see a post-split sell-off, at least not anytime soon. The idea being that you can have more upside and still get a bit of credit and be good. I'm going to say at a cost. Let me see, I should say at a net cost, a bit of a cost. All right. And I'll give a third option, which is kind of really an addendum to option 2, which is just that, or addendum to option 1, which would be to let it get called away, leave it alone, and add some leaps. So you'd be basically taking some profit, or taking the profit and converting it, keeping your upside, converting it into leaps to have less money at risk. So those are your options there. Is there any questions or thoughts that anyone had about all of that? Kind of interesting. Just when you think Apple, I mean, just when you have a decent reason as to why Apple might have a bit of a sell-off, you go and put some calls on, and short calls rather, and cap it. But you know, it's easy to Monday morning quarterback. And as you can see, the profits in Apple are not too shabby. That's just today. Just today's gains in Apple. For the year, it's kind of not very close. Apple has undoubtedly been our winner. Just little old Apple. All right, so moving along, not seeing any questions, so hopefully that made a whole lot of sense. Smith & Wesson. Man, this one has been so weird. So Smith & Wesson has been moving around what seemed like kind of erratically. We both have been kind of scratching our heads as to what is going on. What we discovered was that it looks like Bank of America was as a investment, or not investment, but let me start over. Bank of America was no longer going to loan to a Smith & Wesson company because they don't want to be involved with supporting a gun manufacturer, which is fine. It's their prerogative. But it still was kind of weird that then we see it bounce so quick, all the way up to 21, all the way down to 18, back up to 21. I guess 20 down to 18 to 21 today. And we're just kind of wondering what the heck. And basically what I think it boils down to, and actually, you know what? Before I tell you what I think, I've been babbling on for a minute here. Has anyone have any good ideas as to what has been moving Smith & Wesson around? Because my answer isn't necessarily the answer. But have you guys that have been following this one a while had any ideas? Nothing coming over, so I assume the answer is no. Oh, we got one. What do you know? Social unrest and sale. Yes, so Jim, I would have thought that it would just keep going up with that comment. People buying guns because of the social unrest, huge gun sales. But what the heck? Why did it go down? Why does it go way back up, go way back down, go way back up? So, here's my thoughts. Another comment. And also due to political climate. Yes, Jim. Thank you. I would definitely say for those two reasons alone is why we're bouncing here. So good comments, and I like the way you put that. So what's the deal? If you remember, and I could go back and show history, but it's a waste of time. Just to save a little time, we had sold shares of Smith & Wesson, if you remember a few weeks back, back up here for around $25 a share. And no, I didn't misspeak. We sold them for $25 a share. So what the heck? The high at that period is saying $20. If I can zoom in a bit here, we can do a little better. So why the heck is it saying $20, 63 is 70 cents at this level? Why is it saying 21 at the high today? These are, I'm not sure if these are all-time highs, but certainly the highs of the last few years for sure. So how is that possible that we sold a stock whose all-time high is $20, a little over $20, $21? How were we able to sell that for 25? Are there any guesses? And this is kind of a tongue-in-cheek, funny trivia, but it does kind of go into maybe why things are acting the way they are. Why would we be able to sell a stock for $25 that has never traded as high as more than 21 and change? High of 22 intraday. Any guesses, guys? Throw something out there. If you get it right, I'm going to be super impressed. If you get it wrong, you know, I would not have guessed this right. I'm sure of it, so don't feel bad. All right, not getting any takers. So how did we sell? How do we sell a stock at $25 if it has never traded, excuse me, higher than 22? Not at, I want a dollar sign. Ida guesses long puts. Well, that would be right, Ida, and thank you for the guess. If it had fallen from, I guess you could technically have bought 25 in the money long puts at $20 a share of a stock price and then cashed them in. But that would just have been a good guess on which direction, and you would have not made enough to justify exercising the option to sell at 25. But very good guess. And I think that's probably as good as guess as I probably would have made. So here's the answer. Do you guys remember? I think I had mentioned it, maybe Kevin has, I can't remember. Smith and Wesson, if you remember, recently broke away from their American Outdoor Brands division, and what used to be ALBC, I don't think it's ALBC anymore, but they relisted as a separate company. It's AO something something. But they separated the two companies, so the two brands, and they're listed separately. So when that happened, around here, when they were trading at 25, they split away. It drifted down, bounced right on this pivot point, and has been a little more volatile, but headed back up. So when that happened, that portion of the company, whatever share price they decided, it must have been around what, $4 or $5 a share, is now part of that American Outdoor Brands company, and so they had to adjust the stock price to how it's listed and how it's seen in history on stock charts all over. So yes, we did sell it at 25, and they readjusted it as a new company, not new company, but a different listing than their other brand, and the resulting share price was around $4 or $5 less. So that is how you sell a stock for higher than it's ever been. Now you know. All right. Pretty interesting. I don't think that will ever matter to anyone, but it is kind of interesting. So there you go. But that leads into the next reason as to why maybe it had done that. Obviously, this, and if I can draw a little bit, this was a reaction to that. And I would think that maybe some of this is the reaction to the fact that now Smith and Wesson doesn't have some dead weight. And maybe it's headed back up. But it's still a little weird. I would still think about staying away until things settle down, and either it continues to confirm rather, or kind of calms down in volatility. The reason being is the reaction. There's no real direction for me that I can, I guess, appreciate yet. And if we get a bit of a sell-off from it in the next weeks, and I would rather see it test that $17 or $18 range, whenever that might be, before getting into something again with Smith and Wesson. So that's my thoughts. Just kind of being, maybe I'm being a little greedy on wanting to get a better price. But I also don't know that we've really established a good trend yet back to the upside. I just don't know. That's my thoughts. Costco and Target, I wanted to follow up with those back, not back, but two all-time highs. Costco back up to, I keep saying back up to 351. Target up to 150. It got as high as 155. Target is one that will jump up, as you see, like this. And in fact, if I go back a year, there we go. You see these points where it'll jump up and stay in a range like that. This is obviously COVID market. Nice big rally into earnings and a big jump. That's what Target tends to do. So go back here. So my thoughts, and the reason I'm grouping Costco and Target is because they're both kind of the two bellwether retail and grocery retail stores that have been doing well through the pandemic and have actually garnered more revenue and more money simply because they've managed it so well. But if you had followed either of these, Costco or Target, I had mentioned leaps. I had done leaps. I'd done covered calls for Target. In fact, not a bad idea if that's something you're interested in. I just like how well leaps have done for either of these, just from how they seem to trade in a range, and you can kind of buy a couple of contracts or whatever it is, multiple contracts, and buy and sell at tops and bottoms of ranges and head up. But Target, I would say, works really well for a covered call. I just don't know that that is the best idea through this period. And coming up to the election and that kind of thing is going to matter more. So I would hold off maybe on a covered call type position. But for now, if you've had these two positions on or have been trying to kind of play those support and resistance ranges like I have and kind of showed a little bit about, I think that right now is a decent time to sell some of these off. Seal, I want to sell it, not seal it. Going back to Costco real quick. I had up to 4 calls that I had taken a couple off, I think here, and then took another one off around here and let the last one run. I don't think that Costco is going to go up forever. So I'm going to sell my last one and wait for a dip or something where I can leg back in. So if you haven't already taken a profit on those, what I'm doing and what I'm telling you what I'm doing is selling those off and waiting for another chance to buy the dip, so to speak. Target is kind of the same thing, and that's why I feel maybe I would wait on doing a covered call. Just because I don't know. My idea would be to have a Christmas rally, but I kind of would want to avoid September, October to maybe where I could buy something cheaper and possibly see it go into a Christmas rally. Unless you think that Biden is going to win, in that case, then I would just stay away from most everything. So I'll say, no, not a bad place to take profits. If you have, I'll show you what I have. Target. So I have both of these 125s and 160s. So my plan is take profit on the rest of these 125s, which I'd taken. This is about a third to a quarter of the total amount of contracts I had across a few accounts, including my own, where I took some profits and let these ones run. After the earnings, I added the 160s to have some more profit because they had done so well in the earnings. So these ones obviously don't look as good, but these ones for a cost basis of $8.95 are worth 28, 29, 28.32. And I'm going to be looking to close those off and let these January 22 ones have more time. Let those ones run, where if we do get some sell-off or Biden or whatever it is, I can dollar cost average those with a lot of profit and keep doing what I've been doing. So that's my thought and my plan. But you can also add a new leaps out to, and you can do, in fact, the same 160 calls, you'd get it a bit cheaper, 1670. Not a bad one to do, January 22, 160 calls. So just the idea is to have enough time and money to dollar cost average, not average. All right. Those are my thoughts. Let's see. Ida, you mentioned you took some profits on Target. So again, congrats to you for doing so well with that. And I'm glad that I was able to suggest something that worked really well for you. So well done and good job. If you had taken profits, it's what it sounded like you were saying in an email. Well done. Jim also mentioned election results for Biden as the reason. Smith and Wesson, I think you were commenting on going up, which yes. And I would think that, just to go back, if we ever get debates, I know Biden kind of wants to dodge that bullet, but any more campaigning debates on, you know, gun confiscation, gun restrictions, gun control, whatever you want to call it, is gonna ignite more, of course, gun sales. It's kind of an irony that I find a little bit, well, funny, but ironic. On the other hand, if people feel like Trump is starting to get it in the bag, maybe those will cool off. I don't know. Gun sales kind of seems less likely, especially with riots and protests going along. Just creates uncertainty. People don't like seeing their cities and businesses burn and go up in flames. Ida says yes, she took some profits. Awesome, Ida. Well done. All right, last but not least, I wanted to talk a little bit about Under Armour, and this is really was going to be my main, I guess, trade, if you want to say it's a trade suggestion. Let me go, not 3 A's, but 2 A's. All right, there we go, 1025. So this is kind of going to be a contingent suggestion. As I've looked at futures, Under Armour is down 11 cents, which would be about a little over 1%. And the futures trading at 10.14, which still means that it's above a $10 even price. Has been making a support level of 975-ish. So my thought is that if this continues, just to zoom in a bit, hit this pivot point right at 1025. If we get this Under Armour continuing up, breaking this resistance level of the 50-day that it hasn't been able to quite stay back above, I think we have a decent chance at seeing it continue to go up. My reservation is the amount of time, or I guess the timing on when that might happen. Let me get a little closer here so it doesn't look so tiny. So when will that happen? Well, of course I don't know, and I'm not going to pretend like I do. However, just take a look at Nike. Why the heck is Nike just continuing to go up to all-time highs, and Under Armour just kind of stinks? It's a smelly, old, used Under Armour shoe. What is the deal? Can anyone tell me what the heck the deal is? Nike, and kind of pull them up side by side. Nike at all-time highs. Under Armour, not so much. But if you went back to their last earnings report, guess who beat their numbers? Guess who missed their numbers? You're absolutely right. Under Armour beat their numbers, Nike missed their numbers. And yet Nike is sailing into the stratosphere up to all-time highs, and Under Armour is languishing down at half the value they should be. What is the deal? I'm going to say Under Armour versus Nike. So why is it, excuse me, why is Nike up all-time highs? I say Under Armour is stinking it up. Any thoughts? I'll be honest, your guess is probably as good as mine. So if anyone has any idea, throw them out. How can Nike underperform and Under Armour outperform and have such a different reaction to an earnings report? Any takers? Nike has a forward PE of 34, 72 PE, current PE, price to earnings ratio. What is Under Armour? So I don't know why that's not there. Forward PE is 99. Something's a little off with this. But let me tell you, obviously those numbers didn't show us anything that was useful, because if you kind of dig a little deeper, Nike is far and away more overvalued. Under Armour is undervalued according to what their earnings are. FinBiz doesn't have them, darn it. That doesn't make me look smart, but if you can believe me, if Under Armour was being priced similar to Nike, it would be closer to $25 to $27 a share, sitting down there at 10. So here's my thought. This is a classic undervalued stock, gotten beaten up. Peers are doing worse and yet getting all the love. Why? Because it's Nike and they have a cool name and they have Air Jordans and Michael Jordan and Tiger Woods, and everybody knows Nike and knows that Nike's the biggest and the best and all that. And I'd agree, it is the biggest and the best brand for those types of sports brands. But we're talking about share price, and because everybody knows Nike and everybody loves it, their share price is overvalued. And because Under Armour had a CEO come out and say, yeah, we probably shouldn't have taken those athletes out to the strip joint and yada yada yada, which they shouldn't have, but my goodness, do you think that Nike doesn't do that? Does Nike not have child labor out in, China and wherever else issues nobody wants to talk about. Yeah, I guess those are some problems. So why is Under Armour getting nailed for this type of stuff? Because maybe their CEO keeps talking about it, and not as good as Nike about glossing over some of those issues and moving forward. And that's my take on it. That's probably why. If the CEO would just shut up, maybe things would have been different. Who knows? So here's my trade, and then I think I've run my course and babbled on long enough for you. Check out Under Armour leaps. $22.50 is what I'm kind of looking at. Reason being, I'll go out 2 years. They certainly have gotten much higher, but really the next stopping point in long-term trends is up here around 2022, 21, I guess, but pretty close to 22, with a high up to 28. So with that in mind, looking around the 22.50s as a price point, going out to January 22, about a year and a half, we're looking at such a cheap leap that you could get into and just let it sit there and see where it goes. Got a question coming in. Let's see. Jim, yes, branding and a variety of areas of clothing. Yes, IDAS. Market Watch says Under Armour's lost vital sponsorships. I'll have to check that out, but to see exactly what you're talking about. But good thought. But again, they still made money, and they still did better than Nike. What gives? So let me just do this. So my thought again is, we don't know when. Leave yourself some time to make it happen, so the when takes care of itself. And I'm going to cancel that and get closer to a midpoint there. So it's so cheap, the price doesn't necessarily make the biggest difference, but if you're looking at something cheap that can go out forever, and not forever, but quite a long time, this is one I think works. And what I'm looking for near term to confirm in the way of trends is just again to see if it can hold for a few days, maybe get over this 10, 25 pivot point and hold above a 50-day. If it doesn't do that, then I would certainly wait. Wait to see if it holds breaks above 50-day. And 10, 25 pivot. In which case we would take a look at this leap. Any questions or thoughts? Well, that does it for me. I'll get this posted up so that you can refer back to it if you need to. But that is my trade for if in the next few days Under Armour starts heading up. And obviously you wouldn't have to wait till it gets to $20 a share. But maybe it's up to the 200-day up at 13, you know, whatever it is, or 12 or whatever. Just the idea that there's plenty of upside, and finding some stocks that have done okay, at least through this crazy period, and still haven't gotten any love for it. All right, that's it for me, guys. If there's no other questions, thanks again. It was nice to be with you this evening. I will see you again Thursday, as I'm taking over Thursday as well. So please join me then, and until then, have a good night. Take care.